Quick notes before we get questions or comments. You know, firstly, as a disclaimer, this none of the content discussed here is financial advice of any sort. Second thing is we, as Capital Mind or me as Deepak Shenoy, may hold securities discussed here, including the mutual funds discussed. And three, this is more open wheeling discussion. I don't have answers and I can't speak on behalf of any mutual fund or the RBI. So, much of this much of the other speakers here may actually have more information. Now, let me start with the concept as it has evolved. It turns out that an old rule by the RBI, which was in March 2008, where RBI had increased the investing limits for mutual funds to invest overseas in securities. That limit was $7 billion. The mutual funds could have invested in foreign equities, in ADRs of Indian companies, I think, and a bunch of securities of Indian companies that have been listed abroad as well. And that limit was increased from, I think it was 1 billion to start with and became 7 billion in 2008 gradually, including a $1 billion limit on ETFs that Indian mutual funds could invest in ETFs abroad up to $1 billion. SEBI took that rule and said each fund house is a limit of $1 billion. And as an industry overall, you have a limit of 7 billion. Now, this fund house wise limit was, I think, close to or has been hit with a Motilal Oswal fund, where a week or 2 weeks ago, they stopped fresh lump sum investments into some of in funds that invested exclusively abroad and retained the SIPs. Of course, the ETF that they have continues to trade. And the market makers of that ETF, they're called authorized participants, they can continue to buy fresh units from the fund. Even that rule right now, as of right now, I think that continues. I may be wrong there, but please feel free to correct me. But as I saw just before this, there wasn't any announcement on that note. But now that the entire $7 billion limit has been hit, what happens and where do we go? First, let's look at what happens. My view is that all funds will say no more lump sums. They might allow continuing SIPs in some funds. Specifically, there's a fund called DSP Natural Resources, which is like 50% non-India, 50% India. There's Parag Parikh FlexiCap fund, which has about 30 to 35% of non-India equity. So these guys potentially can take take new investments, though I think Parag Parikh has said no more lump sum investments and no new SIPs after Feb 1st. So you can get current SIPs can continue, but new SIPs won't. So I'm assuming they'll be able to use the new money, any money that comes in, to buy only Indian securities and not foreign. So I don't know the exact AMFI circular here as on what they have said specifically. But I think the concept is that you can't use any further money after Feb 1st to invest abroad. That means they can't remit money abroad. You can't buy dollars and then use those dollars for investing in mutual funds. In foreign securities. And that's the mutual fund industry as a whole. This, I think now at least, there are a bunch of funds. In fact, there's some new IPO-ish kind of funds also by Navi that have been announced, but I don't know whether their IPO is on or no longer on. I don't know what happens there, because obviously as an industry, if you can't, a new fund cannot as well. There are a bunch of people who already invested. So what happens there? So my view over here is no problem if you want to sell. You won't be able to buy anymore. Your SIPs may or may not continue. That, again, a little bit is left on the fund house itself, but I don't know how they can continue if they're going to only invest abroad, especially if this limit has been hit. Third, what happens to ETFs? So ETFs trade in the market. you don't buy or sell them from the fund house. So obviously you buy and sell them from a third party. They can continue to trade. It's possible that now the arbiter, usually what happens is an ETF is that if you buy a fund whose NAV, and you know the NAV because it has underlying securities, you know the NAV is, let us say, 110 rupees. And if you buy it at 100 and if the market is trading at 115 rupees, then a market maker can sell it to you at 115 and then go buy it from the fund at 110 and bridge that gap. There is a bit of risk involved in foreign securities wala funds here, because when you buy it, there's a 1 or 2 day lag, and therefore those funds always trade at maybe 1% premium because of this potential difference in the time at which they can actually execute the arbitrage versus what the time that the Indian market trades. But most other Indian ETFs like an S&P 50, I mean, a Nifty ETF of Nifty Bs or something will trade at a much smaller 0.4, 0.5% difference between the NAV and the actual fund value. Now, in foreign ETFs, there are two, I think. The largest ones are Motilal Nasdaq 100, and there's a FANG Plus ETF by Mirae. These will continue as far as I know, because there's been no trading halt on them. But because now the arbitrage can no longer be conducted, because if the price goes up, if the market maker cannot buy the funds from units from the fund, then they cannot execute the arbitrage. So therefore, the market makers will not be there, no longer be big players, and therefore the price can be anything in comparison with the NAV. And we have seen this in the past. Earlier, when Motilal Oswal's ETF was not very popular, this would be as much as a 15-20% premium to the value of the ETF when this was before 2018. So we've seen this in the past. So it might be that situation can happen again, but I don't know. Again, now what are the mitigating factors? RBI can come and say, well, I increased the limit last in 2007, and we can increase the limit further now. $7 billion is not much. The other thing is that SEBI can change some of these rules, perhaps. I don't know how, but but the main thing will be RBI to come and change or increase the limits. Now, why doesn't RBI come and do it right away? It could be because things have been developing slowly, and this industry-wide limit has only been hit kind of recently. So it's possible that the situation hasn't been allowed to evolve. Hasn't come into their consideration set just yet. And remember, it was 7 billion in 2008. It was such a huge limit at that time. I don't think there was even 102 or 300 million dollars of foreign investments at that time. So for 300 million to become $7 billion took a lot of time. It's only recently that foreign investing has gotten popular with Indian mutual funds, and it's also a way to beat the LRS limit, if you ask me, because LRS limits per person are $250,000. But now you can have investments in mutual funds, which can be more than $250,000, which is roughly about 2 crores, let's say. You can put 10 crores into a mutual fund, which invests abroad. So you're effectively beating the LRS limit, but the money remains onshore in rupees, in the sense you are effectively, it's a little bit more complex than that, but while it's a way to beat the LRS limit, it's less onerous than taking the money out and then it goes kind of into territories where it can be used for other purposes than it was intentioned. So RBI might be more okay with something like this rather than having just pure dollars remitted out of the country. Now, having said that, I think it's time for RBI to up the limits. For a difference between what has happened in 2008 and what is happening now, 2008, our forex reserves were roughly $300 billion. Today, we are at about $634 billion, but we also have $50 billion in forwards. So roughly close to $700 billion. That's in RBI's forex assets. Of course, India has a bunch of things that happen. We trade a lot. There is a current account deficit, which is basically roughly what we purchase versus what we sell on a regular basis, the difference between the two. Now, this difference has actually been positive the last 4 or 5 quarters, except for the last previous quarter, and possibly in the December quarter also will be negative. The negativity stems from the fact that we are net negative in what is called merchandise imports, net positive, heavily positive in service exports, largely because of computer software, which is the IT companies. Net positive in terms of NRI remittances, that is, NRIs remitting money to their Indian relatives, which is about $18 billion a quarter. And then this kind of, is the current account. But then it's also balanced by foreign direct investment inflows, which is your investment into startups and so on. Other inflows like portfolio inflows, which is foreign portfolio investors, FPI, investing in the Indian market, and so on. So that's how the account is balanced. And RBI, of course, purchases or sells dollars as a whole and builds up its own reserve. So typically, RBI builds reserve because net of all this, dollars come into the country and have been for the last decade or so. There was a few times when dollars left. What happened in those few times was that the RBI should have, because its currency stability is its one of its mandates. It should have been selling dollars in order to bring the rupee devaluation under control. But at every time there is a crisis, RBI does not control the rupee devaluation and lets the rupee devalue heavily. For an example, we have seen 2013 when the rupee was allowed to go to 68 rupees, when there was a relatively small outflow of dollars compared to the reserves we had. In 2020, in March, the rupee went to 75, 70, I don't know, more than 75, I think. Very quickly, even though only $10 billion left India. So relatively small outflows, and we had $600 billion even then, relatively small outflows of dollars. The RBI forgets its stability mandate. If the RBI says stability is not a mandate, it has other considerations, then the fact is that RBI's reason for not allowing Indians to invest abroad doesn't really hold. We should actually say, okay, let you guys invest abroad. That's fine. Foreign investors allowed to invest in India, Indian investors allowed to invest abroad. My only concern is, do I lose too much forex by allowing people to invest abroad? Answer: with the $700 billion hoard, $7 billion is too little. So they could increase it to 25, 30 billion without a problem. Remember, 300 billion in 2008 to about 700 billion now. Much of those reserves have been built in the last 6 or 7 years, I think. And what has happened largely is that what we keep thinking of as, oh, we have 13 months of imports as reserves, that concept also doesn't really hold very well, because we consider imports as imports standalone. We actually import a lot of things that are changed and re-exported. Diamonds, for instance, we import raw diamonds, export finished diamonds. Crude, we import crude, export petrol and diesel. We do, because of that, you should look at things like net imports, and then net imports including services, because services exports are a given. So why will we stop exporting everything and only import everything? That doesn't make any sense. Then if you look at net imports, including services, then we have probably 400 months, I don't know, some much higher number in comparison of reserves. So we should not have reserves limiting things like what Indians should be investing abroad. Of course, 7 billion is too small a number for us to even have this argument, but I'm assuming that this argument must be had at some point, and that's why I'm putting the numbers out there. Okay, I've spoken a lot. Let me ask all of you, if you're interested in speaking or asking a question on this, please go ahead and click or request to speak. So I will put you on stage. Meanwhile, let me also, while we're building up the question queue, as it may be called, let's see if you want to be co-host. Yes, okay, requested. We have one, we have Sarthak, so let me approve him. Okay. Sarthak, if you're on, okay, go for it. Okay, he's connecting. Um, Twitter Spaces seems to have a lot of bugs. So if I get out, I'll come back in here. One of the things that I think is a problem when you invest abroad with directly. Let's say you take a, your answer can be, Deepak, why are you using mutual fund? You can use LRS when you invest abroad. I'll give you one reason why. If you invest in the US as an Indian resident and you put, let's say, 1 crore rupees because you're all of you are rich, in Twitter, I think most of us are, by definition, rich. I'm just kidding, but I'm just saying. Longer term, let's say you build up your long term holdings of something, Microsoft, Amazon, whatever, to 1 crore rupees added up. Now, this adds up to more than $100,000, $125,000 today, but let's say it's worth $100,000 at some point in time and you die. The US has a rule that says if you're a non-resident, non-citizen of the US and you die, then your investments in the US directly, there is a 40% inheritance tax on them. Well, it's not 40% per se, but I think it goes up to 40% very quickly after the $60,000 limit. So beyond $60,000, so your next of kin get only 60% of your money. So this is a problem of investing directly. But if you invest through an Indian mutual fund, they don't have any such restrictions. So there is effectively no US inheritance tax that you're paying when something like this happens. So I think investing directly into the US markets at least is a bit inferior compared to going through mutual funds. But of course, a lot of new rules will come about, new things will change. So right now, that's the kind of rules that exist. Okay. Anybody else who wants to talk? I think Sarthak had come in and left at that time. Viraj bhai, can you hear me? I hope you can. You're on, sir.
Hi, great, Deepak. Great. The kind of numbers you put out. Thank you so much. Um, Tell me if so. This RBI is kind of stopped, but so there are at least for HNIs in India, there are a lot of options that you can essentially access everything in US and across entire Asia Pacific via Singapore LRS. I mean, all your banking arms in Singapore and Hong Kong will come hand over fist. So you can just do this through LRS, through a DBS or a stand chart in Singapore, no?
Yeah, of course, you can. But here's the two things. First of all, LRS is tremendously more expensive. And it's a little open-ended. So in the sense, you can do a lot of things with it once you get the money outside. So in a sense, you could invest in, for instance, any foreign company, including your own. It could be private companies. In fact, private companies, there's a new sort of law that's happening because they are saying Indians are investing in for private companies outside of India using the LRS route, and that should not be permitted. It should be through the not a liberalized remittance, but through the official RBI channels, which means
Yes.
you'll have to go and give them reasons and all that. So they are going through that route. But you could use LRS to invest abroad directly, but it's much more expensive. I mean, the cost of investing in a mutual fund is like literally clicking a button and buying it. Uh, the mutual fund has the ability to negotiate much lower costs from its banks. So it can go and say, well, collectively, I'm putting so much money, so give me a better remittance rate, give me lower fees. Now, many banks nowadays charge as much as 1,000 rupees per remittance. मतलब एक रेमिटेंस करने के लिए you have minimum do a few
Right.
lakhs just to make up for the remittance cost, right? So you end up with uh, economies of scale working against you if you're doing it directly, especially at a small level. Now, of course, if you're a HNI of that big sort, that's a different thing. You have the 2 crore limit and you can do whatever you want with it. But I am looking at even the relatively little guy over here. Now we use Google, we use Microsoft, we use Android, we use everything, and then we don't have a chance to participate in their equity.
Right.
But we might as well, instead of just giving them money, we can earn some of it back by buying their shares,
Yeah.
right?
Right. It
So I just think it's just more efficient to use a mutual fund.
right. And my second question is, and especially you are one of the guys who has been given kind of an approval to set up your AMC over the next couple of years. Of
Not yet,
all the,
not yet, not yet. I mean, we're
in
applied.
principle, in principle, let's put it that way. Uh,
हाँ, नहीं, नहीं, वो that is also not true because the in principle approval is a thing and that hasn't yet happened for us. So we are just an applicant.
Okay. So, do you see, I mean, all the new applicants, do they see this as a big gap right now? Um, I mean, if I want to actually invest in Southeast Asia, let's say if I think Southeast Asia countries will do well, we probably have only one PGIM giving us that option, or US may only two, three funds, China only one fund. Like, do you guys see that as a big opportunity where you can provide that mix and match across the countries and across the spectrum?
Yeah, I think definitely there is, there is definitely need for a lot more, uh, accessible. I mean, if I'll give you an example, there's something called frontier markets, which is Africa, which is
Right.
South America, parts of
मीना
it. So we don't have
फ्रंटियर
any.
काफी कुछ है.
करेक्ट 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 और उसमें इंडेक्सेस भी हैं और उसमें स्पेसिफिक थीम्स भी हैं देयर वाज अ पॉइंट एट विच साउथ ईस्ट Asian banks, specifically in Singapore and a few places there, were yielding 6% in dividend yields. Even now, the dividend yields in Sing dollar terms is like 4.5%. So, how do you get access to anything like that? Even if it was a theme, let's say dividend yield, India is a growth country. Those countries are more stable, so you can actually bet on dividend yield as a theme. So, how do you build more in terms of this thing? So, of course, every applicant will be like, give me the widest universe available for me to invest. Uh, but I think it's just a little unfair on the Indian public to not have access to this. I understand where we are with respect to, with the RBI should be protecting our economy and all that. But at some point, we're allowing foreigners to come and own most of our companies. We might as well get a chance to own something of the companies not in India.
Absolutely, yeah. Great point. And I hope at least the incumbents and the new players, everybody takes it up. I mean, I actually saw a letter written by Neil, and they probably are the largest well-known fund. Parag Parekh
Yes.
Sir's fund is probably the best known fund in India. I hope they take it up and get it done very quickly, yeah, because we might as well, at least as general Indian public, get access to US markets through specialized route, yeah, and at a fraction of cost. So I hope for the best. Thank you so much.
Absolutely. I mean, if you thanks so much. Yeah, I mean, absolutely. I think Neil. I mean, the PPFS FlexiCap has about 5,000 probably crores in equities, but I don't know if that number includes only the amount they invested and
No,
versus the amount it
amount
has become.
invested is some 30%, right? So around $200 million is across in US.
Okay, so that's yeah, that's
But they're probably the best
they
known, is what I'm saying.
yeah.
They probably pioneered this entire thing. Yeah.
To be honest, the pioneer wasn't them because there were a bunch of funds even earlier than this. Motilal's Nasdaq 100 has been around since, as an ETF, has been around since 2011. And
Right.
before that, also, there were a couple of funds that were investing abroad. I think Franklin Templeton had a few of
No,
them.
Franklin had a
But
feeder fund. So I was obviously part of the
correct,
team who was, Franklin had a feeder fund, but it was not actively managed from India. It was a feeder fund which was feeding into US markets where the
US
decisions were
funds.
taken from US. They were not taken from people sitting in India. But Parag Parekh is basically people sitting in India taking decisions here, which is what I really
Yeah.
respect.
No, no, agreed. Like actively managed kind of
Yeah,
concept.
yeah. And not only
Great,
India, yeah.
great.
Matlab Japan, Switzerland, they bought Nestle, Europe, like across. So
Yes, yes. No, agreed, agreed. I think let's see how this goes. I hope everything's back into action soon. But uh, cool,
thank you so much.
great.
Thank you so much, Deepak.
Thank you, Rajbhai. I'll just get Samit on. Samit, sir, your comments. Love to
Hey,
hear
hi
your thoughts.
Deepak. Thanks for initiating this topic. I'm sure closely being watched by a lot of impacted people. So you don't have an MF license yet, so I will consider you as an external party, but at some point in time you will become a member of Amphi. So question that I have for you is this is a known issue that we knew that last time the regulations were out in 2008. About a month back, Motilal made a declaration. Today, Parag Parikh made a declaration of sort of freezing some of these investments. Question is, as an industry, as manufacturer of these products, do you think Amphi or the individual mutual funds could have done a better job of flagging this off rather than giving a 48-hour notice and putting all of this to a block?
That's a great point. Actually, I don't even know what has triggered it suddenly. As in, is it because earlier there was a concept of saying it was just the amount of investment abroad that was limited to 7 billion. Whether Amphi could have maybe gotten this data together much earlier and said, okay, we are reaching these limits and we need to start slowing down on them right now, because not just there are new NFO applications that have recently been approved as well that talk about investing abroad. So it's relatively popular as a topic. And also, of course, I think petitioning RBI, usually this would be done by a SEBI or maybe an AMFI, I don't know. But somebody has got to do it to say, listen, this is too old a regulation. We need to kind of revise these limits because we're getting close enough. So to come to a point where everything is full stop, versus doing it gradually, bringing it to people's notice, even having articles, Amphi's itna how much ever goes into mutual funds sahi hai. A small part of that can go into just educating people about the fact that RBI needs to raise these limits, or that there has to be constructive discussion on these limits as well. This could have been done, I suppose, but again, um, it could just be either oversight or a feeling that, oh, when the limit comes, RBI will increase it. Yeah, what's the big deal? Uh, you know, but obviously none of this has happened. I don't know what's happening behind the scenes. I wish somebody from inside the scenes could come here and tell us the picture, but
Yeah.
obviously there's more to it than we can see right now.
Yeah, because I also foresee that in coming times, whenever the limit is raised, but in the interim, I'm sure a lot of people will do their own calculations and say, "Oh, had we got a chance to invest on 2nd of Feb and on 3rd of Feb, the NAV was so low, we could have got so much more returns, but this was blocked, blah blah." So I just want to be sure that we, despite becoming so big as an industry and so much awareness, I still see we are highly reactive in some of these well-known issues, and I don't know what could have provoked some of proactiveness in this space.
I agree completely. I think as much as I think it's all of us, I mean, me included, perhaps could have done more of this analysis in terms of hitting overall limits. But honestly, I didn't think we were anywhere close until recently Motilal kind of reached that point. And now it seems that the whole industry has. So it's almost like ये कहाँ से आ गया इतनी जल्दी? But I mean, given the fact that $7 billion is what, about 55,000 crores. 55,000 crores
Yeah,
is probably 2% of the industry AUM. So it's so small, it doesn't even occur to you that this would be a problem. Uh, and industry AUM in 2008 was probably less than 10 lakh crores. So,
true.
it's probably grown multifold, so that to point where you won't notice a 2% of AUM today, but you would have noticed it as a 5-10% of AUM at that time. So
Yeah. Okay, let's hope this is one of the last one of these roadblocks, and collectively as an industry, we become smarter going forward on this topic, hopefully.
I hope so. I hope so. I think, I mean, even the LRS limit needs to be increased. It has been in the past decreased actually. Once in 2013 they decreased it, then they increased it, and we've not come anywhere close to hitting any meaningful limits on that. Uh, in fact, if anything, our LRS that happens, it happens through different routes. So one of the LRS routes is, of course, to invest in securities abroad. But another one is education. So if you look at the amount of LRS that goes out as education, and RBI releases data every month or so, the amount that is being remitted as education has been decreasing the last few years. And one of the, even before the pandemic, it's been coming down. So one of the reasons is also, I think most people would go to study abroad, or larger amounts were taken to study abroad in the US. European colleges are not as expensive. So US, a good portion of people who would go from here taking loans would have some kind of financial aid in the US. So what has happened in the US is because of a lot of other factors. States have reduced their funding to some of the colleges, who have therefore reduced the amount of financial aid they give students before they come in. So it's like before you come in, you get promised a certain amount of financial aid. Usually the financial aid happens a few months after nowadays, which means that somebody has to fork up much larger sum of money to be able to commit to going to the US to study, which is why the LRS education loan portion has relatively been a smaller part of this remittance uh, structure. So in that context, the amount, I mean, we effectively lose or gain something by people remitting less on education. Even that limit, if you just take out, it probably means that you could have much more of a limit for mutual funds.
Yeah, true, agreed.
Cool, great. Any other requests, please feel free, and just click request. Just a quick note to reset. The idea here is what happens when mutual funds are no longer allowed to invest abroad. The overall industry limit is $7 billion, and apparently that has been hit or close to being hit. It appears that a few mutual funds have taken action. Motilal has recently released a note saying no lump sum investments in all of its funds that invest abroad. Most of those funds are the funds that invest exclusively abroad. Parag Parikh, which had a flagship FlexiCap fund, which has a partial investment abroad, today released a note saying no investments are no further lump sum investments are allowed after February 1st. And any new SIPs have to only be created before February 1st. So you can do SIPs, that means further money can be remitted, but no such thing. Just a quick note around things like if you set up something like STPs, I think they may also not be allowed because STPs are not SIPs. So the structuring of an STP may not be allowed. And this applies to a lot of financial planners who actually told people with lump sums to put money into a liquid fund and then transition that money slowly as STP into an equity fund, which makes sense because you don't want to invest all at once, you want to invest it over time. But those STPs in these foreign funds may not be allowed. We have Neil as well. Neil, welcome. Please take the stage. Oh, are you there? You're off? Oh, you're in. Okay, fantastic. Please.
Hi, Deepak.
Hi. Go ahead, man. Awesome. Good to see you.
Yeah, good to see you too. I just wanted to clarify one thing because I spoke to Parag Parikh guys, and essentially for the partial funds, as in funds which have the flexibility to switch between domestic and international investment, they don't have to stop subscription, but because some of them want to keep that astro allocation intact, they are doing so voluntarily. So it's a little different for the partial ones, but yeah, they can themselves choose to stop.
Oh, that's actually good news. That means technically, if these funds just changed, I mean, of course, some of them cannot, but if these funds are partial, they can continue to take investments and just not have the same asset. I mean, just change their asset allocation accordingly. That's
Yeah, they'd
interesting
have to put
because
the money in Indian stocks, basically.
got it, got it. It's quite that's quite uh, well in a way. I guess Parag Parikh has taken on the different role by saying I'll stop my investments completely because I don't want to change my asset allocation. Um, However, I think, I mean, I don't know, at some point, does it make sense to stop allocation into a fund because it throws people's financial plans in disarray in a way if you've been doing regular investments? I'll give you one example. I mean, if you're doing things like through Zerodha coin, for instance, the um, the whole concept of how a coin operates treats all investments as lump sum rather than as SIPs, because otherwise you have to do something called a EMC SIP, which is a different thing and all that stuff. A lot of people who have uh, who have plans of saying I need only 4 or 5 funds and chose a Parag Parikh as one of them, now have to forcibly go find other funds because Parag Parikh is not accepting any more money when they can. It's not like they can't, but they've chosen not to, which is a little, just makes me a little sad, I guess. But such as investing sometimes. Thanks, Neil. That
Yeah,
was a
I think
great clarification.
I think Deepak in 2021 in the FlexiCap category, Parag Parikh was among the top 4 or 5 in terms of flows, if not the very top.
I would imagine so because they've gone to 17,000 odd crores, right, in AUM. So
Yeah.
And then Neil, I think this will more of be an advantage only to flexi caps. The likes of Motilal, Nasdaq, etc. I'm sure they don't have this flexibility.
Yeah, they have to stop.
Yeah.
cool, cool. We have Ashish as well.
Deepak
Ashish, go ahead.
Radhika is also here, so you can ask her all your questions. What are they doing to change this?
Yeah. Hi Deepak, it's Ashish here. So my simple question is that I'm doing a good amount of SIP in Parag Parikh. So whether I need to continue or need to hold on. So what is your suggestion on that? Thank you.
No, if there was a market for selling your SIP, the fact that you have an SIP, that would actually sell today because you can't create new SIPs after 1st of February. So you might actually you might actually lose out a lot more if you cut off your SIP. The point is they are continuing to, honor SIPs, which will not happen after Feb 1st. So it's a one-sided decision. If you don't continue, then it would be. But I, in general, why would you stop unless you have a fundamental reason? I need money. I don't have any faith in all markets anymore, or something like that. Why would you stop investing? Or if you're disillusioned with a fund manager, other than that, I don't think there should be a reason to stop. And this they tell you ki you can continue your SIP if you have an SIP going. Of course, if you have a lump sum that you are doing every month, you might want to convert that into an SIP. You have time till Tuesday afternoon, and that might be a good time to kind of think about if you have lump sums that you're doing anyways. I'm the lump sum kind of a guy. I do lump sums once in a while, but then I don't do my PMS, so forget that. But if I were doing lump sums, I would consider doing an SIP in such a fund because lump sums will no longer be allowed.
Yeah, Deepak, makes sense. Thank you.
Thank you. If anyone else wants to ask a question, please go ahead. I've invited Radhika to speak, but I don't know. I don't know if she can. Radhika, if you're here, we'd love to hear your comments on this also. I know very heavily protected, SEBI restricted area, and we have Sandeep Parekh here also. Sandeep, if you're, let me ask you also if you'd like to speak on this because I think the legal view may be quite interesting because what happens if these limits are breached? I have no idea who gets penalized. I mean, if the industry limit as a whole is breached, right, Dika?
Hi, Deepak. I was actually trying to be a silent listener, but you not let me be a silent listener. So I was trying to
I'm so
sneak in.
sorry.
which is clearly not. But I'll keep my comments short. I think the industry limit is obviously close to being hit. It's an RBI limit, and the hope is that it will be extended. And all efforts will be made between everyone concerned to try and work towards extending it. But till it can't be, obviously, AMFI has issued the guidance that it has. The good news is that
Cool.
yeah, go ahead.
Sorry. No, go. Please finish.
So I said till it can't be extended, of course, AMFI has issued the guidance that it has. But our hope from industry is that, of course, the limit is extended because international investing has really taken off. I mean, I remember in my own fund house, we had 4 or 5 international funds 5 years ago, and the total size of that book was about 100 crores. That's about 4,500 crores now, and I'm sure everybody else has a similar experience, and it's taken off for the right reason. So we are really hoping that that limit is extended, but till then all of us will have to be compliant with whatever there is, and which is why I think you're seeing fund houses take the steps that they are.
Got it. Any idea what happens if these limits? I think any individual house hitting a limit is one thing, but if the industry hits the limit, who does RBI like kind of penalize?
Okay, so I mean, nobody wants the industry to hit a limit. So there is one thing about individual fund houses hitting the limit, which has happened in the past, which is why you saw the closures. But I think the prudent thing that we've done as an industry is before we hit the limit, if we are close, before we hit the limit, we're taking action so that we don't hit the limit, because hitting the limit is not an option.
Wow.
Adhika, can I
Okay.
confirm your understanding on one thing?
Yeah.
Which is ETFs, as in FOFs feeding into foreign ETFs are not close to the limit.
Yeah,
So
because there is a
those can continue.
yeah, because there's a separate limit there.
Oh, that's the $1 billion
Yeah,
limit,
which
is
is
it?
not fully
Or-
utilized.
Okay. Oh, okay. So that's quite interesting because that me. Oh, wow. Okay, this is fun. So we'll be.
Yeah, Deepak,
But
actually, so if you think about it, there is that much awaited Navi NFO into Vanguard's fund. I think the first Vanguard fund being offered in India, which is feeding into an ETF. So somebody had asked me on Twitter about whether that will have to stop, and I don't think it will, because that is feeding into an ETF.
Oh, okay. I didn't know that was a separate limit. I thought that was within the $7 billion, but maybe I read that in circular wrong. But this has not been revised since 2008, so I'm assuming that it's almost like यार ये इतना बड़ा limit है कि कभी कोई आएगा ही नहीं types within the RBI. So, but this is I mean the biggest thing that might happen because of this is people being unhappy that they can't invest, but also that ETF prices may diverge wherever there are ETFs in India which go and invest abroad. Diverge from their NAV, I guess, because that is the only other foreseeable consequence. Otherwise, it's just a gate that prevents new AUM from being built. Radhika, would it make sense for instance, for any of these funds to be, or is there a separate limit for Indian ETFs to invest abroad?
So there are two limits, as I understand. There's a 7 billion limit for investment in offshore securities, which is the one that we've been discussing, and there's a limit for investing in international ETFs, which is what some of the new launches are doing. So I think those are the two limits there, and the second limit is not close to being hit, which is why that's still open for use. That's it.
Oh, got it. Okay.
Maybe Sandeep will be able to sort of chime in here. He's probably a SEBI master on this. I see him on the call, but that's my understanding. So there's a 7 billion and a 1 billion, but I'll probably drop off as a speaker now. But let's hope this gets revised soon.
Yes, I hope so. No. I mean, I realize it's a problem where we can't even. It's just hit. Just thanks so much, of course, for giving your views. I think we'll all look forward to this limit getting removed, and no need for having such a discussion where we don't know, where suddenly AUM hits a wall, not for reasons that are known to either fund management or to the investors. So thanks, Radhika. I'll also invite anyone else who wants to speak. We'll probably run this for another 10 minutes if there are any more speakers. Otherwise, I think we've talked so much about this topic. But a large amount of it is still premised on the fact that RBI, I mean, the limits are close to being hit, and that RBI hasn't yet uh, opened the gates, so to speak. And to be fair, also, I don't even know what has happened behind the scenes in sense of has RBI already been approached? Have they said no? Have they, if they've not been approached, they are probably looking at, somebody's going to them and say, yaar, ye sab ne inhone to band kar diya investment. And they're saying, oh, wait, it's just this limit, we'll figure it out. So if it's the latter, that's good. If it's the former where they've been approached and they've said no, then it's weird. Remember, just as a note, RBI has recently been selling dollars. Um, well, not so much, but earlier they should be buying a fairly large amount of dollars. Recently, they have been reducing their forex reserves. So they did a big purchase in gold last year. They didn't do so much in dollar, and last few months they have been cutting down on those. Some of it may be related to outflows because foreign investors have taken out roughly $5 billion this month. 5 billion is not much, but the fact that the rupee hasn't uh, risen, fallen, is because the RBI has kind of countered that by its own actions in the forex marketplace. Plus, there's been a bunch of foreign money that's also come in through few FDI operations this month. So it's not like I think removing or keeping this limit is going to be because RBI is afraid that so much dollars will flow out. If it's taken 13 years to reach, maybe it's taken 4 or 5 years now to reach this this $7 billion limit. It might, if they increase it to 20 or 25 billion, it may still take another 5 or 6 years at least before they get there. So the only one thing I do think the RBI may be concerned about is whether they will believe that individuals investing in such funds are effectively violating LRS limits by taking very large positions in these funds. Now, how that pans out, I don't know, but that may be the only hitch in RBI removing these limits, saying as an individual you may have a restriction how much you can have in these funds. But I don't know. I'm just theorizing aloud here. So this has been quite good. If anybody else has any comments, please feel free. Okay, and we don't have any more further questions. Leave you with one interesting interesting thing. There is a there is now at least 10, 15 different ways to invest abroad. You can, okay, Samit Bhai, it's back here. So quick note over here is there are many ways to invest abroad. One of the simplest ways was to use a mutual fund. More complicated, you can use LRS to invest abroad by going through a bank. You can use one of the new found startups. There's been a startup recently that's tied up with State Bank of Mauritius, which can allow you to directly use your rupee balances in the rupee account and very quickly, seamlessly transfer abroad as well. So some part of this transfer infrastructure has reduced. Because otherwise, LRS paperwork meant you had to fill a physical form going to the branch. That has kind of gone away. And then you can invest in both debt and equity abroad, listed and unlisted. But recently they have uh, changed some things. Okay. Samit Bhai, please go ahead. And anybody else, if you want to request, go ahead. I don't see any other requests on. So if you requested it, can you unrequest and request again?
Hey, thanks, Deepak. While
Just
others
one.
join, quick one, just to understand, get a sense of clarity in terms of what next. I don't know if Radhika is still around or if Sandeep has a view on this. is it individual AMCs who need to reach out to RBI directly? Is it AMFI and then AMFI to SEBI, SEBI to RBI? Do we know what are the next steps to remediate this, or are we still discovering this?
Okay, I don't know about this. Neil, would you have an idea?
Sorry, I missed the question. Could you repeat?
Okay, I think the question was largely because of this limit. What happens now? Does RBI have to be approached by SEBI, by AMFI, or individual funds to increase the limit, or is there a different way this thing is getting handled?
No, I think SEBI would have to approach RBI. I don't think that the funds can directly go to RBI, given that it's not their regulator.
That makes sense. That makes sense. Okay.
Just one point, Deepak. You mentioned on the spaces that STP might be impacted in Parag Parak. So I was just reading through Neil's disclosures on FlexiCap. STPs and SIPs both will not be impacted. So STPs will not be impacted.
Yes, that's something I double check with them because the language is rather confusing in their release. But they were quite clear that STPs which are already
Yeah,
registered, they will not be impacted.
they will not be impacted. So on
Oh,
that front, at least people are pretty safe who have done STPs and wealth planners who have planned the STPs.
okay, okay. Thank goodness. That's at least. I don't know why I got this note from somebody who said it was STPs are out.
Yeah, no, the
So
language is
there
very ambiguous.
Yeah, in fact, I was telling somebody recently that the best way to do this is quickly to set up, put the lump sum into the liquid fund at Parag Parik and then do an STP. But now I was thinking, my goodness, ab kya kare? But good, if STP is allowed, then it's good enough. I think the industry also, I mean, I'm getting some WhatsApps. I don't have time to switch and see, but I'm seeing some things that say they're expected to increase it very soon. RBI, of course, will not come on to work for a weekend for this, of course. So the earliest they'll take a decision is also Monday or Tuesday, and then there's a union budget. So obviously, a lot more things on their mind. But hopefully, this is a relatively easier decision to make. And given so I don't know how many people are on this, but I'm assuming that enough people are interested because the industry's hit $7 billion in roughly 2 or 3 years. Uh, uh, I think this is going to be an interesting topic to speak about. Uh, Apart from the fact that Indians invest in the US, Indian companies companies in India who are actually headquartered in the US, who have listed stocks in the US, they offer their employees ESOPs. So I don't know if that gets counted under LRS, but I think not. I'm not sure though. Uh,
No,
but
RSUs, Deepak, are not part of LRS.
Okay, okay, awesome. So that means effectively that if we were to, you know, uh, that is another way for Indians to have an exposure abroad. But it seems like, the regulated, clean way would be through
Deepak,
mutual funds.
actually,
Huh.
there's one more way. So if you remember, NSE had announced some months ago, I think 5, 6 months ago, that they would enable receipts of American companies to trade on the IFSC, the Gift City exchange. And since then, nothing seems to have come of it, as in there's been no further announcement. By now, it should have been operationalized. So I'm not sure what's happened to that.
Well, the issue is that to get an American company to list its receipts on some other exchanges now, unless India is such a huge market, plus Indians investing in the Gift City exchange itself is fraught with, because that's technically not India as a territory. So you have to do LRS just to get your money there in the first place. So it's not only difficult for the Indian investor to go there in the first place, it's also difficult for the American listed entity to kind of list its ADRs or DRs of any sort in the. If they were to list an ADR, they would directly list it on the NSE main board, I guess, like Stanchart has done.
Yeah, so they were called unsponsored depository receipts. So they were basically some in synthetic products that the NSE would construct without the cooperation of the US companies, is what my understanding
Okay.
was.
Okay. That I wish that, I mean, that's very interesting. That maybe that's the way the Singapore guys wanted to build up futures of Indian
Hey,
companies, I
Deepak, can
guess.
I add on that?
Yeah, Peter. Yes, yes, yes. PJ, please
Okay.
go ahead.
So just an
I
update on that, what Neil mentioned. I'm not sure how much I can reveal, but yeah, I think that process of both the exchanges having their subsidiaries in IFSC is on. We also registered us in IFSC recently, and the process of investing for Indian retail investors in US securities via IFSC is very much on. So probably in this year, you'll see almost 10, 12 brokers offering that service.
That's brilliant. So you mean investing in is this the drive wealth wala type thing, or as in NSE becomes some kind of channel partner that allows you to pass through invest into the US market through a US broker?
Something on that line. So I'm aware, but I'm not sure how much I could reveal on that because we are doing our integrations with that. But it would be in basically, so today, if you talk about it, right, there are two challenges. One is basically access to the US markets, and second is how do you transfer money from India to IFSC or anywhere outside. So the exchanges are solving for both. Okay, so the companies which are very, very popular out there, you will have access to investing by that, and the transfer of money from India to IFSC is going to be much, much cheaper.
Oh, that is awesome. That would be really awesome. That I think will be a game changer. Hopefully, well, interesting that you say that because the limits might have political challenges to be increased also. Because अगर लोग invest कर सकते हैं mutual fund के through, then why would they go through this other route? And if I'm just saying, I mean, if there may be one, I mean, I would imagine that the NSE might actually petition RBI to not increase this limit. Ki if they have to go, let them go directly through the NSE instead. Just thinking aloud. But I mean, of course, speculating too much.
No,
But
from
it's
from what
interesting.
I know, I think the LRS limit will remain even for IFSC because technically it's not part of India, right? If you're
No,
sending
no, I
money
was talking
outside
about
of
the MF.
India.
Yeah, I was talking about the MF limit. So if MF limit is increased, then the interest in that NSC particular offering will be a little bit lesser, especially if I want to invest abroad. Uh, but yeah, I mean, I
No,
see
but Deepak,
the
that would imply that the NSE has more lobbying power than the entire MF industry put together. So I don't know if that's the case.
well, lobbying power is not usually a function of size. It's a function of who you know. So, um,
True,
you
true.
know, and who pushes harder. So sometimes strange things can happen without. I'm not. I mean, I don't want to be a conspiracy theory guy. So it's just be too many conspiracy theories in everyone anyway. But it's interesting because you'll have multiple plays here. But I think it's a good thing for everybody if these limits are increased across the board, even the LRS limit. And I don't think we're anywhere close to hitting LRS limits on. Uh, 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 as in the total LRS that's being done by Indians to invest abroad. I don't think it's even meaningful in any way. So it makes sense for RBI to increase it across the board, and of course to ease up the process even further, so that, like PJ said, there will be brokers in India who can easily offer uh, seamless service to invest in US stocks directly without going through hoops like कौन से बैंक में क्या करूं ये वो and all that. If it's something that the exchange can manage, that will be fantastic.
And the good part is, people, this will be a regulated flow. So obviously, SEBI has its own, I don't know, branch in IFSC, and then there are exchanges. So this entire process of you investing from India in US stocks, okay. In fact, it's not just US stock. There is some more development out there that you would be able to do it across any exchanges across the world. So I think they're looking at it very, very progressively.
No, it's lovely. Um, it's great because then, if I want to go to Thailand, for instance, or to Singapore, or to Vietnam, or to any other country, if there is a seamless way to access it, it'll be great. I just um, the mechanics of it may take time to evolve, but this is quite interesting. And I do think that the US market itself has so many different ETFs of so many different sizes where we couldn't introduce, even if we wanted, some of those ETFs in India at all. You couldn't invest in a marijuana ETF in India because I don't think SEBI will ever give approval for it. But if you go to the US, you'll find such ETFs there. Bitcoin ETF. I don't know if they exist, but if they do, that's an interesting philosophy for someone who doesn't want to buy Bitcoin directly or stuff like that. So there is, I think, that diversity there where even the mutual funds will not be able to offer in India, but the standardized exposure, which is regularly invest small amounts in US stocks, may be easier to do through a mutual fund. So quite interesting, very interesting conversation. To thanks to everyone. I think 1 hour of conversation on a Sunday night. I'm so sorry for keeping you guys all up at such a late time, but it's been super interesting. Just a quick thing to end my part of this round is RBI is likely to increase these limits soon. At least the expectation is that the mutual funds have hit or are close to hitting this limit as an industry on the $7 billion limit set in 2008 for mutual funds investing overseas. That means some funds, at least some or all of the funds that are investing abroad have limited fresh investment starting February 1st. SIPs and STPs will continue. So if you have those, there's no problem at all. You will still be we don't know how the ETFs will trade. There are two ETFs in the Indian exchange that I know of, maybe more, I don't know, but the two ETFs, which is FANG Plus and NASDAQ 100, may not have market maker support if market makers are no longer allowed to buy units from the mutual funds themselves. So the prices of the ETF should be closely watched and compared to the NAV before they are bought after February 1st. Lastly, let's all hope that this limit is raised because 7 billion is terribly small for India. For Indians to invest abroad, they do have other options though. They can buy, use third parties. Some of the startups enable this, which is to invest through a US broker, which happens through an LRS route limited to $250,000 per year per person. You can wait for an NSE offering that PJ talked about, which may be coming soon, which allows Indians to use the gift city to invest abroad. And of course, there may be other options like use a vehicle in Singapore that then invests abroad, which may be available to the ultra HNIs here. Thanks everyone for listening. And Neil, Samit, if you have any closing comments, please go ahead. Otherwise, I can close the room.
No, fantastic session. Thanks a lot, Deepak. Always good to hear you, irrespective whether it's a weekend or a weekday. Interesting, hot topic. Let's hope it turns cold as soon as possible and we get back to investing the way we want. Thanks, Deepak.
Yes, I second that.
Okay, thanks so much. Great to have interacted, had fun just talking about this and getting my head around all the craziness that's happened. I think always useful to have the views. If anyone, I mean, it would be lovely to hear if anyone had a view that said don't raise these limits. But I guess nobody had that view, or people who had the view chose not to speak. But I'm sure we might see some contrarian views in newspapers or such soon. Would love to hear the other. Have fun, everyone. Thanks for listening, and have a great whatever's remaining of the Sunday.